There is one number, a single threshold. Historians find it buried in the final chapters of every collapsed empire. Not a losing war, not a market crash, not a political scandal. One number. The Spanish Empire crossed it before losing the Americas. The Dutch crossed it before Amsterdam became a footnote. The British crossed it before surrendering the pound's throne forever. Historian Niall Ferguson gave this threshold a name. He called it Ferguson's Law. The law states this: when a great power spends more servicing its debt than defending its borders, the decline has already begun. And in early 2026, the United States crossed that line for the first time in its modern history. $270 billion on interest payments. $267 billion on defense. The line is crossed. The algorithm has seen this exact pattern before. And every time it has, a new world order followed. To understand where we are going, we need to go back, 500 years back, because this is not a new story. It is the same story, told again and again, with different names on the map. The Spanish Empire, 1500s to 1600s. Spain was the first superpower of the modern era. In 1492, Columbus landed in the Americas and changed everything. Silver poured out of the mines of Bolivia and Mexico in quantities the world had never seen. The Spanish dollar, the piece of 8, became the first truly global reserve currency. Every merchant on earth wanted Spanish silver. Every trade route ran through Spanish ships. For over a century, Spain was the center of the financial universe. But then something happened. The silver created inflation. Wars drained the treasury. The military stretched across 4 continents. The debt compounded faster than the mines could fill it. By the mid-1600s, Spain had declared bankruptcy 4 times. 4 times. And the reserve currency crown quietly passed west to Amsterdam, the Dutch Empire, 1600s to 1700s. The Dutch were not just merchants, they were innovators. In 1609, they built the Bank of Amsterdam, the first modern central bank on earth. They invented the stock exchange. They financed trade across Asia, Africa, and the Americas through the Dutch East India Company, the most powerful corporation the world had ever seen. The Dutch guilder became the global reserve currency. For almost 200 years, if you wanted to do business anywhere on earth, you settled in guilders. But then the debt came. War after war. The costs of maintaining a global empire began exceeding what the empire was earning. The Bank of Amsterdam, which had started with gold and silver backing every guilder in circulation, began printing more claims than it had hard money to support. A classic run on the bank followed. The guilder collapsed, and the reserve currency crown passed to London. The British Empire, 1800s to 1900s. Britain did not just inherit the crown, they industrialized it. The steam engine, the railroad, the telegraph. Britain became the manufacturing capital of the world and the financial center of the world simultaneously. The pound sterling dominated global trade for over a century. But then came 2 world wars in 30 years. The debt exploded. The productive capacity hollowed. The colonies gained independence one by one. And in 1944, at a conference in Bretton Woods, New Hampshire, the British pound was quietly dethroned. The new reserve currency was the US dollar, backed by gold, backed by the largest industrial economy on earth, backed by the most powerful military in history. The cycle had begun again. Now we arrive at the uncomfortable part, because the data running through every collapsed empire above follows the same 7 stages. And we are not watching history. We are living inside it. Stage 1, military overextension. Every empire expands its military to protect its trade routes and enforce its currency's dominance. Then the perimeter becomes too large. The costs multiply. The United States now spends over $900 billion per year on defense, more than the next 10 countries combined. But here is the critical distinction. That money is no longer buying expansion. It is buying maintenance. Spain reached that point too. So did the Dutch. So did the British. The pattern is the same. Stage 2, currency debasement. In 1971, President Nixon closed the gold window. The dollar was no longer exchangeable for gold at a fixed rate. From that moment, the money supply had no physical ceiling. After 2008, the Federal Reserve printed trillions to bail out the financial system. After 2020, $5 trillion more entered the economy in under 18 months. Just like the Bank of Amsterdam printing more Gilder claims than it had gold to back. The template is identical. Stage 3. The debt spiral. In March 2026, the U.S. national debt crossed $39 trillion, accumulating at a pace of $7.2 billion per day. $1 billion every 3 hours. Every day, without stopping. Interest spending has grown to more than 2.5 times its pre-pandemic level, from $375 billion in 2019 to $971 billion in 2025. For the first time in the modern era, net interest outlays in fiscal year 2026 are projected to hit $1.05 trillion, surpassing the entire national defense budget. That is Ferguson's law, triggered. Not a prediction, a confirmation. The British crossed this exact threshold in the 1940s. The pound lost its reserve throne within a decade. Stage 4. Loss of productive capacity. In the 1950s, the United States produced nearly 40% of everything the world consumed. Today, that number sits under 16%. The factories moved to Asia. The supply chains crossed oceans. The economy shifted from making real things to financing claims on things. Wall Street compounded. Main Street stagnated. The GDP looked healthy. The markets looked healthy. But the backbone of productive power had quietly migrated overseas. Spain lost its silver mines. Britain lost its factories. America lost its manufacturing base. Same stage, different decade. Stage 5. Social and institutional decay. Trust in institutions has collapsed to generational lows. Political polarization is no longer a trend. It is a structural condition. And once the population stops believing the system is fair, every economic crisis becomes exponentially harder to resolve. Because the tools required to fix a crisis require cooperation. And you cannot build cooperation inside a system that people have stopped trusting. This is the internal rot, the one stage no policy can reverse quickly. Rome understood this too late. Stage 6. De-Dollarization. Now we reach the stage we are currently inside. The moment the world starts building the exit. It started with one decision. After the 2022 invasion of Ukraine, Western governments froze over $300 billion in Russian central bank reserves. In one single move, Washington demonstrated something every central bank on earth was forced to silently process. Dollar reserves are not unconditionally safe. They can be seized. That moment changed the psychology of global finance permanently. Because the safety of the dollar was never just about inflation protection. It was about sovereignty. And that guarantee had just been publicly revoked. Watch what happened in the years that followed. BRICS nations purchased 663 metric tons of gold in the first 9 months of 2025 alone, worth approximately $91 billion. And they kept buying, even as prices hit all-time highs near $4,400 per ounce. Gold set 53 new all-time highs in 2025. The average benchmark price for the year was $3,431 per ounce, a 44% increase in a single year. The dollar's share of global foreign exchange reserves has declined from 71% in 2001 to approximately 58% today. But here is the figure that should stop you cold. BRICS nations now hold 17.4% of global gold reserves. In 2019, that figure was 11.2%. And on the 31st of October 2025, something happened that almost no mainstream Western outlet covered with the seriousness it deserved. BRICS launched the Unit, a digital trade currency pilot built for settlement between member economies. The prototype uses a 40% gold and 60% BRICS currency basket that adjusts daily. Not a replacement for the dollar. Not yet. A bypass. A parallel financial rail built specifically so sovereign nations can conduct trade without touching the US dollar system at all. BRICS Pay, a decentralized payment messaging system built on blockchain, is now operational and designed to route transactions entirely outside SWIFT, the Western-controlled interbank network. China's mBridge digital currency pilot has now been joined by Saudi Arabia. Oil, the very commodity that cemented the petrodollar in 1974, is beginning to settle outside the dollar. In the 2025 World Gold Council Central Bank Survey, 95% of respondents expected global gold reserves to increase. A record 43% stated they planned to increase their own holdings. Not one planned to reduce them. These are not retail investors chasing momentum. These are the people who manage sovereign money. They are not panicking. They are preparing. And that is far more dangerous than a panic. So what does Stage 7 look like? Look at Britain in the 1940s. The pound had been the world's reserve currency for over a century. Then came the debts of 2 world wars. Then came the loss of empire. Then came the moment the world quietly decided it did not need the pound anymore. The transition took roughly 2 decades. Those who understood the pattern, who moved into hard assets, global equities, and real productive exposure, preserved their wealth across the transition. Those who held pounds, long-dated gilts, and paper claims on a system in decline paid the full price. The wealth did not disappear. It transferred. And that transfer is what Stage 7 represents. Here is what the data is telling us to think about right now. First, recognize where concentration risk lives. Long-duration U.S. Treasuries now carry inflation risk, currency risk, and geopolitical confiscation risk simultaneously. Excess cash sitting in a single currency is a concentrated bet on one system's survival. Neither is where you want your savings anchored inside a reserve currency transition. Second, think in assets that survive regime change. Gold has no issuer, no counterparty. It cannot be printed. It cannot be digitally frozen the way a sovereign balance can. Central banks worldwide are now accumulating it as strategic monetary infrastructure, not as a speculation, as a foundation. Commodities and energy exposure carry pricing power across currency regimes. Multinational businesses with revenue denominated globally carry natural protection against any single currency's decline. Bitcoin, for those with higher risk tolerance, represents something no prior empire transition has offered. A stateless monetary asset that no government controls, no central bank can dilute, and no sanction can freeze. Third, think geographically. British investors with concentrated pound exposure absorbed the deepest losses across the 1940s and 1950s. Diversification across geographies is not portfolio theory during a reserve transition. It is survival architecture. This is not a sell everything signal. It is a stop assuming permanence signal. The data does not care about patriotism. It only records what has already happened. And what has already happened, every single time, is this. The people who prepared survived. The people who waited to understand only understood after the damage was done. Every empire in this video followed the same arc. Rise, overextend, debase, spiral, decay, and then the world stopped needing their money. Spain fell, the Dutch fell, Britain fell. The data lines drawn over 1,929 and the data lines drawn over 2,026 look disturbingly familiar. The threshold has been crossed. The alternative rails are being built. The gold vaults are filling. The exit is under construction. The only question that matters now is this. When the dollar eventually loses its reserve crown, what fills the vacuum? The Chinese yuan? A BRICS gold-anchored unit? Gold? At $10,000 an ounce? Or Bitcoin as the first genuinely stateless reserve currency in the history of civilization? Drop your answer in the comments right now. We read every single one. And if you want our daily market analysis, with our pattern and deep data decoding before it ever reaches mainstream media, we have launched our exclusive newsletter. Gain your free access today and join our inner circle. Link is in the description. Data does not lie.